News, things are working. Welcome everybody to what I'm really hopeful is going to be, and I know is going to be a fabulous a chance to dive into this very, very important moment in I would say the history of money, the evolution of money, and the arrival of a new programmable form of money, spearheaded by all sorts of different participants, but in this particular case, we're looking at the role that central banks are playing in this. My name is Michael Casey. I am the Chief Content Officer at Coindesk, and Coindesk is very proud to be partnering in this event with Policy 4.0 to look into China's new digital currency, but also other central bank digital currencies. I've got an absolutely top-notch panel to discuss this today. I will introduce them to you momentarily, but let me just first of all just lay out what I see as this moment. We are at something of a convergence point. We're at a moment where COVID-19, no need to give anybody too much in the way of details there. We're all really well aware of what it's done in terms of the impact on the global economy. The big question, as far as I'm concerned, I think many people as well are wondering, is what happens next? Massive amounts of debt will have been racked up. There are huge economic implications for the world, and some sort of reckoning to deal with that in terms of the role that central banks and governments play in basically bringing the world's people through the challenges that are to come from the prices to be paid for dealing with this. This is, of course, happening in the midst also of something of a political shift. We've just come through, also no need to really give details on it. Everybody's well aware. A very momentous election in the United States. Still not entirely sure whether it will proceed in the orderly fashion that we are accustomed to in the United States. And clearly a very divisive event, and one that is, again, also raising questions around the policymaking framework for economic management as again we enter into this very difficult moment. This is also happening at a very important time in terms of technology, and particularly for those of us who have been interested for some time in the evolution of digital currencies and blockchain technology. Not only are we seeing Bitcoin just overnight get through $18,000, closing in on its all-time high, as the world is contemplating, whether or not there is a need for this decentralized, sort of scarce store of value at a time of uncertainty such as this. We are also, and this is what the main topic of today's conversation is about, seeing central banks start to dive really quite seriously. Every central bank in the world now exploring the idea of a digital currency for a host of reasons. We're looking at the role that they play potentially to improve stimulus and direct programmable funding mechanisms in the wake of this COVID crisis, but also thinking hard about how this is integrating into an IoT world, an Industry 4.0 world, where money itself becomes software. This is the age, I would say, of programmable money, and I'm just going to sound a little bit like a bit of a lecturer here. Those who argue that this is no different from, say, PayPal or a WeChat or an Alipay, and that we are just simply seeing a digital version of banking online. Hopefully we can get to the bottom of why that isn't the case now. This is a unique situation where the money itself, the token, is a bearer instrument, one that is now imbued with the power of software. And this does change, I would say, everything. So we're going to dig into why this all matters. This panel that I have today is as good as one could ask for. We have Tanvi Ratna, who is the CEO and founder of Policy 4.0. She'll be talking about their report. An absolute honor to have John Rolle as the governor of the Central Bank of Bahamas. I was delighted to be at a conference in the Bahamas 2 years ago when they were just exploring where they were going to be going with this technology, and 2 years later they have launched the first real live central bank digital currency. So we're going to be hearing all about that. We have Tommaso Mancini-Griffoli, who is the Deputy Division Chief of Monetary and Capital Markets at the IMF. He's going to tell us all about the things that the IMF is doing there. David Birch, good friend, an author, a the founder and leader of 15MB, wrote probably the most timely book on this topic very recently out. And my also good friend Pindar Wong, chairman of VeriFi, first vice chairman of ICANN, a true internet pioneer in Hong Kong, and the founder of the Belt and Road Blockchain Consortium, which is a very relevant organization for us to be talking about today. So without further ado, we're going to start this off with Tanvi, who's going to give us a rundown of what Policy 4.0 have been up to in a really very, very important deep dive, comprehensive look, like nobody else has done, I would say, into China's digital currency, the Digital Currency Electronic Payments Project, DCEP. So Tanvi, I'll hand it over to you if you would be happy enough to start us off.
Thank you, Michael. Hello, everyone. I'm Tanvi Ratna. I'm the founder of Policy 4.0. And on behalf of my whole team, I welcome all of you to our launch event in collaboration with Coindesk. We have an audience today all the way from Mongolia to the Americas. And speaking from our home in India, it's our pleasure to welcome you today to this event. As a quick introduction to myself, I'm an engineer and a policy analyst. For most of my career, I have worked directly with governments, both in India and the US, including on Capitol Hill in Washington, DC, with the Indian Prime Minister and many ministries and state governments. I especially look at policies related to tech and fintech innovation and foreign affairs. And I worked globally for some years on blockchain and cryptocurrency issues. As this is our launch event and the first time we're interacting with many of you, let me take a moment to also introduce Policy 4.0. Many of you, when you joined the live stream or came to our channel, you would have seen our slogan, a strategy for the new world. And that is the premise on which we are built, that the world is in the process of a paradigm shift and policy needs new approaches. So Michael, in his amazing context, he laid out many such forces of transformation. And we believe that technology is one of the biggest drivers of this paradigm shift, and we specialize in emerging technology. For many of you who might have guessed, our name derives from Industry 4.0. And what we aim to create are new approaches for policy for this changed world. So while technology has very multidisciplinary ramifications, we see that policy advisory for it remains very siloed. And our USP as an organization is a very multidisciplinary approach, as I'll just illustrate in a second. So the report series we are launching today is a multi-month undertaking. And let me just share with you a little bit about it. So in line with our multidisciplinary approach, the report series that we have developed has been a multi-month effort where it's been our engineers, finance experts, economists, law and policy experts, all working collectively for some months to reverse engineer the digital yuan system and really understand its implications for the global financial system. And this study, as you can see, is a multi-part one, and it looks at financial and non-financial implications, as well as global and domestic implications. And let me just give you a quick overview to some of these reports. The first report here is an overview. The second report is the reverse engineering, where we have really pieced together from a variety of technical data what the reference architecture of the digital yuan system is. How does it work? What are the different levels of users and functional flows between them? What is the programmability in the system? What is the token structure of a DCEP? And all these aspects. And what we saw was that the design of the system was so path-breaking that the financial sector implications were much bigger than people were even anticipating. So the next report, the third one in the series, deep dives into all the implications of the DCEP design for the global financial system. And it also goes into detail on an aspect that many overlook, which is the transformation of the Chinese financial system. And there are implications for this design for cross-border payments, for the internationalization of the renminbi, for the reserve status of the currency, and all of this is examined in this report. And while the currency architecture is already path-breaking, what became very evident to us very quickly is that the DCEP is accompanied by a much larger strategy around blockchain, around data and information flow in the Chinese economy. And the next report in the series looks at this wider Chinese strategy. And it is really that, coupled with the digital currency, which is what makes for this very formidable transformation that is on the way in the Chinese economy. So in the brief time that we have today, I would like you to be aware of 3 dimensions of transformation that the DCEP brings. And before I do that, I just also want to illustrate to you that this is a very different CBDC system than many experiments we see around the world. The PBOC has taken major dilemmas in the issuance of CBDCs and turned them around using innovative solutions. So let me illustrate to you some of these aspects. So a first such dilemma is a buzzword many of you would have heard about, and that is the risk of disintermediation. So as an oversimplified explanation, this is a case of banks and other financial players becoming redundant or their business models being severely impacted because the government starts issuing digital money directly to citizens. You know, they can offer interest rates. You might not need bank accounts anymore. And you can check out our blogs for more on this. But what's important to know is that this is one of the most major dilemmas that central banks all over the world are grappling with when they think about building CBDCs. So China is one of the first hybrid CBDC models in the world. And that means that it's both a wholesale and a retail CBDC. You can read more about this in our blogs. And they have built this highly innovative method of creating retail currency without disintermediating the banking system. And technically, this is enabled by 2 processes in their issuance and reserve management system. So I want you to just take a look at this picture. This isn't the reference architecture, but just to give you an idea of the industry players. And I just want you to take a look at this and assess, does this really look like they're putting people out of business? And it doesn't, right? It really looks more like the opposite. And that is the most important thing to understand about the Chinese experiment, is that they have created roles in the system for almost every existing financial sector player, and a couple of new ones, as you see. And like I said, that has taken significant innovation in the token issuance process. So that is one illustration of the innovative approach that the Chinese government took. A second illustration is around another risk with CBDCs, which is the risk of creating a digital divide. And CBDCs could, in some cases, increase the gap between haves and have-nots, simply because they're only accessible to those who have access to the internet and smartphones. And those who have this access will end up having even more access, and those who don't will be left behind even further. And this is where the DCEP has really pioneered a very novel innovation, one of the most novel innovations in payments till date. And before I do that, I just want to lay out how they have set up 2 types of wallets. One of these is the online digital wallet, and the second is the offline hardware wallet or chip card-based wallet. This is also akin to cryptocurrencies, and if you read an op-ed I wrote for Coindesk, I have outlined how the Chinese CBDC design really blurs the lines between cryptocurrency design and CBDC design. So they have created an online and offline wallet And what they've really created are these different kinds of offline transactions. So the online transaction is straightforward. Offline transactions, typically, there are offline online transactions where at least one device is online and it can communicate with the servers, it can communicate with the banking system, it can settle a transaction in the back end, right? But what is very, very novel is that they have built this double offline payment system. And this is something unheard of, that you can not just transfer, but you can also close settlement for legal money without the internet, without connecting to a bank or any other system. And this is a very unique functionality that is NFC technology enabled. And that's something that we've explored in our research. And I highlight this because this is a very important development. It really changes the game with respect to digital financial inclusion. And when you can bring the bottom of the pyramid into the digital financial system and enable business models for that bottom of the pyramid, that will be transformational for billions of people. So there are so many such aspects that are too detailed to share here, but I will share with you some implications that I believe everyone really needs to understand. And the first such dimension of transformation that the DCEP brings is the DCEP is going to change the nature of money. And just like cryptocurrencies did for money in general, the DCEP will change the nature of sovereign money. Why do I say that? Because firstly, the DCEP is much more than just a digital version of money. Unlike many CBDC experiments till date, the DCEP is highly programmable. And the idea of programmable money is that it's money wrapped in code that can provide all sorts of functionalities. So for example, if you want to automate tax payments for your business, just program it into your money. You don't need to go through a very complex reconciliation and audit process at the end of the year. You can program it into the money that you use for these business payments. For example, you need to lend to someone with a due date. You can just program this into the money instead of going through an escrow service. And this is just one dimension of functionality which will fundamentally impact intermediaries and business processes and systems that we just take for granted today. And those of us familiar with the cryptocurrency ecosystem have seen this for over 5 years since the dawn of smart contracts. But what is interesting about the Chinese experiment is how early a lot of this was done. And those of us who've been following CBDC discussions, we see programmability just becoming a topic right now. But the Chinese began looking into their CBDC all the way in 2014. So the DCEP has functionalities that never existed with digital money, like programmability, offline payments. And eventually what that will do, and why I say it will change money, is that it will change the relationship that people have with money. It's going to change businesses. It's going to change the expectation from governments. If you have, for example, instant tax and compliance everywhere, and the other countries are going to see this and want this, and it's going to become a demand from the people in terms of what they expect out of money. And this is essentially just an innovation in China, but I think it will have spillovers for all parts of the world in terms of what people expect from sovereign money. The second dimension in which our analysis shows that the DCEP will be very transformational is, of course, in the area of geopolitics and the global financial system. So the DCEP will change this dimension significantly, and it will do it in different ways. One of the most obvious ways that's discussed quite often is that it will impact the dollar-based cross-border payment systems. And cross-border payments is a fairly complex system, and for this piece, I really encourage you to understand it from our reports because it touches upon everything from clearing and settlement to cross-border rails to FX, remittance, trade finance. But in a very, very brief way, with the DCEP and other platforms, there is now new infrastructure that bypasses a lot of legacy infrastructure. And this new infrastructure cannot be sanctioned easily. It's very fast. It doesn't need as many intermediaries or as many hops. And this isn't just one infrastructure, but many. And the implications of that are very significant for the current dollar-based infrastructure around cross-border. And that, of course, has implications when we think about the dollar and the global financial system. And as far as the internationalization of the renminbi goes, there isn't just now technical infrastructure for this with the DCEP, but there is also, for those of you familiar, a lot of legacy infrastructure in foreign affairs and trade, which will assist with this internationalization. So the Belt and Road is talked about often in this regard. And what we've explored in the reports is, the digital Silk Road strategy of the Chinese government and how all the elements of that playbook are in place when we think about the DCEP and we think about blockchain. And this is a relatively better known playbook. What we also saw recently is the RCEP getting signed. But let's say that even if they do not rely on trade flows immediately, right? Even if they just rely on their own diaspora and their focus on the Winter Olympics of 2022, which they have confirmed is the date for the full rollout of the currency, even just integrating the DCEP into those sort of cross-border flows will do a lot for its adoption and internationalization. And so China is already the largest trading player in the world, and about 20% of global trade goes through China. So moving the DCEP into trade, moving it into these cross-border peer-to-peer payments, that already does a significant amount for the internationalization of the renminbi. Lastly, on the aspect of geopolitics, the question that comes up often is on the reserve currency debate. And I think apart from cross-border and internationalization, there are many dimensions of reserve currency which have to do with monetary management in your economy, which have to do with your financial system. And this aspect, many people overlook, that the DCEP is going to be very transformational for the Chinese economy. And one aspect of that is the financial system, but another big aspect and a third dimension of transformation of the DCEP is what I want to highlight to you now. And this third dimension in which the DCEP will change a lot of things is the DCEP will change the digital economy. And it will change what we consider as innovation. So if we take a step back here from China and think about CBDCs in general, and some people will argue that CBDCs are just a tool to create a full surveillance state, right? And I also want you to look at a flip side to that argument, which is that CBDCs can actually be enablers for moving you into a completely new reality as a society. So what do I mean by that? Because this is exactly the sort of direction that China appears to be consciously building. So the DCEP is not developed in isolation, right? And as I described to you when I was introducing the reports, there is an even larger strategy around blockchain and data. And that is developing at a very rapid pace within China. So there's a much larger play at work than just the currency, and that's the play around data. And what China appears to be setting up is that it's preparing to gradually move away from the siloed internet-based data structure into an interoperable data layer, which is what blockchain enables. And as I said, it was interesting that they started very early and they incorporated so many features of programmability. On blockchain, they also started very early. And what is surprising is that from the start, they have focused on blockchain 3.0. which is the interoperable production grade blockchains. And that has been the national focus. And some of you heard of the BSN, but it's not just that. There are a staggeringly large number of projects that are being built, and many of them are reaching production stage. And I'm sure some of our panelists will touch upon this. So these are some dimensions of the many that are analyzed in our report series. I'll let you know at the end how to get them. What I'd like to reiterate is that the DCEP really is a game changer, and not just because it's a CBDC, but because of the kind of CBDC it is, and just how multi-dimensional its strategy is. So it's not just a technical shift in making money digital, but it's going to transform the way the Chinese economy functions. And with that, I close my brief on the DCEP, and it's back to you, Michael. Thank you.
You can see the complexity of it, but also the broad implications in multiple different levels. And we'll dig into this a little later when we open this up for wider discussion. But now let's move to another use case. We just looked at, just heard about this digital currency for the largest country on earth, $1.3 billion. Obviously, very different in terms of its economy from the next one we're going to hear from, which is the Bahamas, a country of 385,000, about 3,000 times smaller. An island economy with tourism and financial services as a component of that. So really quite different circumstances, but also clearly, as we'll hear from Governor John Rolle of the Central Bank of the Bahamas, quite an interesting use case as well. So Governor Rolle, let's hand over to you if you don't mind. Give us a bit of an exposition on what the sanddollar is all about. Your very recently launched new digital currency. Thank you.
Thank you, and good morning, good evening, good afternoon, wherever you are. A special thank you to Policy 4.0 and Coindesk for inviting me to participate in this session. Let me say, part of the context of the Bahamas really is size, and you made the contrast with China. And we did so as well because there was a report that China gave out about $1 million equivalent of the digital currency in a promotional effort. And we did the calculation, and for the Bahamas, that would amount to giving out about $1,000 if we were to try that approach. So clearly, the scale in terms of critical mass to get something like this is different for the Bahamas. We got to the point with the Central Bank Digital Currency as part of a journey in modernizing our payment system. And the first focus really is trying to get our system more efficient. We also have the financial inclusion goals, and particularly addressing the protection of the financial system from money laundering and other criminal abuses, particularly helping to improve the perception and the profile of our jurisdiction internationally. And for the Bahamas, it really amounts to identifying the interventions which, in a very small economy, you don't as easily get the private sector to undertake. So what is defined as a public good in a country like the Bahamas will be different from what it is like in some of the larger economies. We are an archipelago, so it's very scattered. And therefore, for us, financial inclusion comes down to the disparities in access to banking and other services if you're using the physical mode. And we are grappling with the reality that for banks, the cost pressures have meant that branch banking is shrinking in the Bahamas, and the shrinkage occurs most in those remote islands of the economy. And so you have the pressures, economic and social, political, to provide what I would call transactional services, access to transactional services in those areas. And digital really is the most feasible way to go. And it means that there is a role for the public sector in providing the infrastructure for that. In terms of the digital approach, one of the things that we recognize was that at least 90% of the population have access to mobile devices and smart mobile devices. So from the point of view of providing mobile technology for digital financial services, that provides an opening. But we do need to tackle any gaps in terms of access, and we are trying to deal with that. So looking at modernizing and accelerating your payment system, first of all, what we are saying is that we need a digital transformation so that financial services can be delivered through the digital channels, and you can remove the unevenness and access. We have to anticipate what that means for having the digital and electronic customer due diligence or KYC systems, because we also want to make certain that if services are provided remotely, there is centralized access to reliable information that can form the basis of establishing relationships. So we incorporated such planning in the design of the infrastructure for CBDC. We also, in the case of the Bahamas, had to lay the foundation through legislative reform for new participants in the payment space. And we have to think, and this is one of the practical things that we have to think about, aside from the making the system simplified and risk-based for AML reasons. If you're providing a substitute for cash, then there is no discriminatory mechanisms in terms of who has access to cash. So how do you design a CBDC that provides that sort of access, which means that you're now going a step beyond the traditional banking and credit card and related services, where typically one assumes that somebody is of the age of majority, or which is 18 years of age in most countries, or some level of consent, so parental consent. So we're anticipating that if you go digital, digital has to include every resident in your population that is capable of transacting commercially. And therefore, the system has to anticipate as well, not only the access, but the data privacy and data protection issues that might come from minors having that digital footprint more prominently. So those issues come to play, and they come across as we design the regulatory infrastructure for CBDC, but as well as how we lay the framework generally for providers of electronic money products and services. So but the practical issues really occupy a lot of your time, in addition to the policy issues around access. And we had to recognize that in the case of the Bahamas, you have a lot of undocumented persons in the country. In this case, the largest concentration would be those from Haiti. And again, you cannot say that because you're undocumented for immigration purposes, you do not have the right to hold cash and transact. So our system has to anticipate, in addition to the AML and other concerns, how we provide access to digital payment services to that subset of the population and visitors. And this is not even touching on the internationalization issues that were just alluded to for China. So all of these areas that we began to focus on, and we undertook policy reforms on various levels before even getting to the point of rolling out a software and an infrastructure for the sand-dollars. But for us, we are going the route of having a retail CBDC, which will also have the wholesale features. And the greatest emphasis there is providing that interoperable platform for all of the financial services providers who would be providing payment services. The emphasis as well is on making sure that we address initial integration on some level with the banking system, build in the safeguard so that CBDC is not the substitute for your bank deposit. And so from that point of view, building in the mechanism so that you don't tempt those disintermediation problems that are often feared in the literature. So we focus also on trying to develop systems that reduce the vulnerability of the country to recovery from natural disasters. And we went through the live experience of that in the Ava Coast and Grand Bahama after Hurricane Dorian. And getting payments up and functioning really helped in terms of getting the commercial activities restarted. And so some of the growth that is ahead of us is understanding how one recover, post natural disasters, and getting basic commerce back and running. some of the important focuses for us in terms of a CBDC, first of all, cybersecurity. So, there are very rigorous standards in terms of admitting the financial services to plug into the infrastructure to distribute CBDC. So that is, and we also subject the central bank as the sponsor of the infrastructure to the rigorous governance process around having a digital currency. And I think there's some important transparency that needs to be developed in that respect. We also focus on the education of actual and potential users, because we want persons to adopt digital use of digital financial products, because for us it is more than just a feasibility study. It is the only cost-effective way that we're going to deliver financial services in our remote communities. And so understanding what are the drivers that are encouraging or discouraging ease of comfort around use of digital products, we have to address those. And we know that some of those have to do with cybersecurity. And one of them, I think, also has to do with concerns about, whether the government or some central authority is spying on your financial transactions in ways that one might not be happy. I think that's an easy one to tackle, because whether it's CBDC or some other means of electronic transaction, I think we're trying to sensitize the public that that digital footprint already is being created, or it already exists. And one of the best interventions that one can make at these times is making certain that we have the regulations and the laws around the governance to protect data as need be. But privacy and confidentiality, we also draw the line in making certain people understand that it's not the same as saying secrecy when it comes to the protection of the system against the criminal elements and abuse. So money laundering, terrorist financing, proliferation, the safeguards for those have to be into the system. And for us, it speaks partly to a challenge at the outset, because while we are progressing as a country towards a national system of digital identification, we are prepared at the outset to have the electronic KYC system that provides that need for the financial sector. And as the government steps in and provides the digital identification system, we can specialize even more around the other more specialist needs that a financial services sector might have on customer due diligence, which would go beyond just the identity element. But initially, in getting to this point, we've had to put a lot of attention to that. And on the cybersecurity, again, we have to make certain that there is education of the users around safe practices, because we think that is very important in terms of understanding the advantages of using digital products, but also understanding how you can be as safe or safer in that space than in some of the instances when you might transact in cash. So that is very, very, very important for us. And a final word, because there's a lot more that I can say, is we said that we're doing this gradually at the outset, because we know that there is a learning curve. So we don't want to stir up too much demand initially beyond what we can manage. And so there's a learning process, but at the same time, we're trying to sensitize stakeholders to the idea that the product that they experience today is not the end point. So this is a progression, and we have to be prepared to scope out how we would evolve. And that is where we are from the present case in the Bahamas. The only thing that I would say we would have liked in terms of getting to this point is to have done more of this outside of the confines of a pandemic, because there's still an element of human interaction that is important in terms of the stakeholder outreach and awareness. And we want to move more freely through the archipelago, because it's important that we get the grassroots elements of our remote communities informed and educated on the process. Michael, I will stop there, and if there are questions, we can deal with those later.
I'm sure there will be questions, Governor Rolle. That was fascinating. There's so much to unpack out of that. It really details. I want to point out. I mean, yes, we'd all love to have done so much of this stuff outside of the context of a pandemic. Quite remarkable that your team has pressed forward with this, not only in the midst of a pandemic, but in the wake of, I think, probably the worst financial disaster. Natural disaster that the Bahamas has ever seen. So really an incredible story of development and determination to pull this project off in the most difficult of circumstances. So congratulations to you all. Let's turn now to a broader international perspective. Let's get Tommaso Mancini-Griffoli, who, for those of you who missed the introduction at the beginning, is the Deputy Division Chief of Monetary and Capital Markets at the IMF. And of course, the IMF is the body most associated with the international monetary and financial system. And I'm sure Tommaso's got lots to say about some of these things, but I'm just going to put some level setting here to suggest that the remarks from a year and a half ago, from Mark Carney, the former governor of the Bank of England and the Bank of China, the Bank of Canada, that was a Freudian slip. He laying out the idea of digital currencies being a vehicle for a new digital hegemon for the system is something that, of course, has gotten people very interested in the idea of the way this technology interfaces with the international monetary and financial system. But the IMF has been working on a lot of this stuff for some time, quite separate from that, and I'm really looking forward to hear what Tommaso has to say about what they've been up to. So over to you, Tommaso.
Thank you very much, Michael. Thank you. It's a pleasure to be part of this panel. It's a great honor to speak after Governor Rolle, and hearing what they did in the Bahamas is fascinating. I'm just going to lay out some of the background, some of the basics, really, in my initial remarks, and then we can get into a discussion in the Q&A part of the session. So, the question here is really, will CBDC really change the way we use currencies across borders? And what are the macro financial implications of that? Now, clearly, it's not at all obvious that CBDC can be used across borders. There are a lot of impediments to that, and we can dwell on that during the Q&A. Again, for the purpose of this presentation, I'm just going to assume that CBDCs can be used for cross-border payments. You might be interested to know that the FSB just put out a roadmap to enhance cross-border payments, and part of the roadmap presents improvements to the current international system for cross-border payments, and part of the roadmap presents more forward-looking solutions. One of those is the use of CBDCs for cross-border payments. So there's an international task force that's actually going to think about whether that is feasible at all, and if so, how should that be designed. But anyways, let's just assume that CBDCs can be used across borders. What will happen to the use of currencies? Now, of course, why do we use currencies across borders? Well, to pay for goods and services abroad, but also to hold and transact domestically. That's known as currency substitution or dollarization. So which currencies do we use currently? Well, there's a variety of reasons why we use a foreign currency: because of the stability of its value, its efficiency as a means of payment. It has to do a lot with the issuer country, whether the currency is fully convertible, whether it's used in trade, the depth of markets that are used for risk management, the stability of institutions, the rule of law, etc. It also has to do with the recipient country, the monetary stability of the recipient country, the rate of inflation, the volatility of the exchange rate. And then, of course, it has a lot to do with network effects. The fact that I hold a currency that others use makes that currency more useful to me. And those are really the forces that determine the use of currencies, of foreign currencies, of currencies across borders. Now, of course, the question is whether digital currencies, and CBDC in particular, has new features that might accelerate the use of new currencies or tip the balance of international currency use. And CBDC specifically comes with very low transaction cost, ease of access, multitude of digital features, and perhaps even to some extent bundling with other financial services through platforms. So with that background, what are the implications, the macro financial implications of the use of CBDCs and more generally digital currencies across borders? So it's very hard to know. We don't have a crystal ball. So we can think of three scenarios. One scenario is the niche use of CBDCs for, say, remittances. So a specific corridor is especially costly and where access is difficult. We might imagine CBDCs being used just for that around the world. That's scenario one. Scenario two is a more widespread use of CBDCs in countries with weak currencies and high rates of inflation, perhaps weak institutions. So that's the dollarization, currency substitution scenario that I just discussed earlier. And then the third scenario is, of course, the widespread use of multiple CBDCs around the world. So we have a multipolar world with a few CBDCs being used as reserve currencies. What are the implications of that? So the first implication I'd like to speak about is monetary policy. And of course, we currently have a situation where about 18% of countries around the world have a share in deposits of foreign currencies bigger than 50%. So that's already, the context, today's context is already one of relatively widespread currency substitution in many countries. And of course, we also know that the transition towards high currency substitution can be rapid beyond a certain threshold, and that currency substitution can be persistent in countries. We also know, of course, that induces a loss of monetary policy control, especially in countries whose business cycle is not aligned to the business cycle of the issuing country. So currency substitution can be a problem. Clearly, we don't see it as a big problem in the niche scenario, but we do see it as a problem in the widespread currency substitution scenario, the second one, and to some extent in the multipolar world as well. Now, in terms of monetary policy, we also need to understand that widespread use of CBDC abroad can also be an issue for the issuing country. There can be large swings in capital inflows, potentially in exchange rates of that country, large swings in the size of the balance sheet of that country, and potentially on asset prices. So issuing countries are also going to be careful about the international use of their CBDC. Now, there can also be financial stability implications. First that comes to mind clearly is run risk. So the availability of a foreign CBDC that is considered stable value and can be easily accessed can lead to run risk away from countries. And that's clearly a risk. The other risk that is related to currency substitution, so more applicable to my second and third scenarios, is instability in the banking system due to currency mismatches on banks' balance sheets, and potentially the amplification of a global financial cycle as currencies are used in a greater fashion abroad. And so generally loss of control over domestic financial conditions, which can also be a problem for policymakers. Now, we also have to recognize that from a financial standpoint, the greater use of CBDCs could lead to, could lower cross-border financial frictions, so that markets can be deepened and more integrated across borders. That's also a possibility. So in terms of reserve currency holding, I think our main takeaway is that we continue to expect changes to be relatively slow because of the importance of the structural forces that I discussed earlier. The importance of institutions, the importance of market depth. Nevertheless, there is the possibility that a rebalancing towards a more multipolar world in terms of reserve currency use could be accelerated by CBDCs. And of course, that might be a good thing. The fact that we have a greater supply of safe assets and more competition between reserve currencies, at least among the academic community, is usually seen as a positive. I'd like to just end with one consideration on terms of policy responses. So what if you're worried about currency substitution? What if you're worried about financial stability risks from a foreign CBDC becoming available in your country? There are a variety of solutions, of course, to choose from. Number one, I think it becomes all the more important for countries to lead sound macro policies, both monetary and fiscal policies, get their house in order. That's been a mantra, of course, of IMF policy advice, and it's all the more relevant in this case. And this was reinforced by various speakers at a conference we held recently during our annual meetings. But I'd like to speak a little bit about capital account restrictions. As you know, most countries around the world implement some form of capital account restrictions, and that is true also of advanced economies. And the question is, with the existence of digital currencies and central bank digital currencies, will those capital account restrictions be circumvented more easily, or will they be, on the contrary, implemented in more targeted and efficient fashion? The jury is still out, and we need to figure this out. And I think the example that I could bring to the table, a very simple one, is of a city trying to preserve its historical center, and you'll see why this makes sense. And this struck me as I was walking through the city center in Florence, which is my hometown in Italy, and they've installed all these cameras in the streets that lead to the city center, and the cameras take pictures of cars, and that limits traffic in the city center. Now you introduce an e-bike. And there are two things that can happen with the e-bike. The first thing that can happen is that people with the e-bike whiz through close to the wall, perhaps under the cameras, and are not photographed, and then you get a crowded city center. The second thing that can happen, though, is that you install a GPS chip on the e-bike that doesn't allow you to park the e-bike in the city center. And so the first scenario is, of course, we circumvent regulation with the e-bike. The second scenario is the use of technology so that we implement regulation in a more targeted and efficient fashion, and we continue to regulate traffic in the city center. So, and that's exactly what we're looking at now with digital currencies. Can those be designed so that we can implement capital account restrictions more efficiently, or on the contrary, are they a source of circumvention? So I'd just like to end with a call for cooperation, international cooperation, and I think it's to the extent that we want digital currencies to be used as an additional channel for cross-border payments, so we're going to have to scope out certain technology standards, certain regulatory standards, legal standards for these currencies to be used across borders. Clearly, there are spillover effects that I discussed on monetary policy control, on financial stability. To the extent that there are spillover effects, there is the need for international cooperation to discuss those and to discuss solutions that are good for the community of countries as opposed to just the issuing country. And thus, it's very important that we offer a table for countries to come around which countries can gather and discuss these issues of spillovers on monetary policy and financial stability. And to that extent, the fund is very eager and willing to help the international community organize such discussions. So with that, I'll send it back to you. And again, and of course, I just wanted to, should have said this at the beginning, the disclaimer, the usual disclaimer holds. These are my personal views and not necessarily those of the fund or its executive board. Thanks very much.
Thank you. Thank you so much, Tommaso. A really good look at the broad implications of how this technology can be transformative for countries and governments in this as we move forward. So, Dave Birch, you've been looking at this for quite some time, but you've also come at this from the perspective of identity and the integration of a whole host of legacy payment systems. And I think you've probably looked into this as much as anybody over the last few years. So, and have published a book on this. Give us your take on what the implications of CBDCs and the transformation of finance generally means for everybody.
Well, I'll start at the lower level and work up to that, just so you see where my points are coming from. So if we do the actually, I don't know if it still is traditional, but when I was doing my management consulting 101 course, you used to have actually 102, because 101 was about billable hours, but 102 was, remember, PEST, political, economic, social, technical, and you do this analysis. If we kind of think about it in that sort of old-fashioned way, and we start at the technological level, I would say that there are some huge implications, because if central bank digital currencies are created as specific systems, one-offs, for those purposes, that has one set of implications. But I have a suspicion that a better way forward in the longer term might be to implement, as you know, and I think you probably think a similar thing too, much more generalized digital asset trading systems, of which central bank digital currencies are one kind, but they're far from the only kind. So I'm sort of imagining that digital currencies will be in this much wider spectrum of digital assets that are traded. That's my first point. So it isn't just substitution of digital dollars for dollars. It's substitution of a whole variety of tokenized assets, baskets of tokenized assets, for what would otherwise be currency transactions. So I think the substitution issues are more complicated, but also more interesting than they seem at first glance. At the second level, if you then go up to the sort of social level, I agree strongly with what the governor said about, if you're designing these things for the real world and not for a bunch of MIT graduate students on a campus somewhere, you have some very different architectural bounds, including financial inclusion, which in itself has absolutely nothing to do with digital currency. The decision to allow reduced KYC on Bahamian and sanddollar low value wallets is irrespective of the technology that's used for the underlying value transfer. And actually, I don't know how the governor feels about this, but actually what I think about that, and to some extent what any of you think about that, is all quite irrelevant, because it's what FATF think about it, which is ultimately the issue there. So although we want to design central bank digital currencies to support inclusion, by themselves they can't do anything about inclusion, because inclusion is an identity problem, not a money problem. Up at the economic level, without going over the ground that Tommaso set out so excellently well, and without touching on the issues that the governor covered so perfectly, I would say that at the economic level, I tend towards the Bank of England, and it's not just because I'm English. I think the Bank of England has done some excellent work on all of this sort of thing. I mean, I know it's sort of funny that it's the Bank of England. We're supposed to be British, whatever. But anyway, the Bank of England, if you read their excellent work on this, they broadly say, so as the governor was saying, on the one hand, you want digital currency to reduce the overall costs of intermediation within the economy and allow transactions to flourish where they couldn't otherwise have taken place. And also, actually, as the governor points out, I want to come back to this point in a minute, in the presence of natural disasters and the lack of networks. I buy all of that. But I also agree with the sort of Bank of England perspective, which is that the upsides, which are less tangible, are much greater. So in other words, creating a platform for innovation and economic growth is, in a developed economy, which the UK used to be, by the way, in the old days, in a developed economy, this is much more important. So creating a platform that allows for innovation and growth and so on is more important than shaving a small amount. I mean, basically, if you live in the UK, you can already send money to anybody else instantly and for free. And we've been able to do that for years through the instant payments network. It's not, it's not that interesting. But what that doesn't have, to put it one way, is an API, or to put it another way, and to annoy most of the people that are watching at Coindesk, smart. They're not really smart. Contracts. They're not really contracts, but we'll get past that. So I want a CBDC that is a platform for innovation and economic growth. The Bank of England report, I can't remember the figure off the top of my head. It is in my book, but I think they said if they replace some proportion, not even all of the cash, if they replace some proportion of cash with digital currency, you're looking at a permanent GDP boost of 3 to 4%, which we really need. We really need some GDP boost at the moment. So, so that's an important characteristic. But the most important aspect, and obviously I've saved that for last, for dramatic effect, is at the political level. And I know all of us, don't want to tread on difficult ground here, and I'm not making a political point one way or the other, but I am just flagging up that you can't pretend that digital currencies don't have a political component, because they do. In the US, the majority of US dollars are not in the US and frankly unlikely to ever be repatriated, not just because of the dollarization of economies, but because of crime, money laundering, terrorism, and everything else that people use US dollars for. I mean, the fact that there are more $100 bills in circulation than $1 bills, I think tells you something about the primary use of Federal Reserve currency. But it's also a kind of soft power. And in a world where, I can't remember the figure, but I'm sure Tommaso knows it, is it 80% of all global transactions have at least one leg cleared through US dollars, which means basically cleared through New York banks. The US is able to exert significant soft power. In fact, The Economist, which is not noted for a radical state, The Economist called it financial carpet bombing, which I think is quite an interesting description. So even a small reduction in the use of US dollars in favor of some other central bank digital currencies. And remember, some of those other central bank digital currencies might be optimized for things that are different to what the US dollar is being optimized for example, sanctions evasion. That has really big implications. And I'm uncomfortable talking about them because I'm not a politician and I don't know what the answer is, but I'm uncomfortable seeing them nudged out of the discussion because there is a kind of elephant in the room. We can talk up Bitcoin a storm, but if the US government tomorrow outlawed Bitcoin, that would be the end of it. There are political contexts to these things, and I think we have to at least touch on, if we're trying to give people a rounded picture of what's going on, I do think we have to touch on those, even though I'm frankly not qualified to opine on the solutions, and I don't know who is. So there you go. So technology, I'm in favor of doing something great, not just making a sort of kind of M-Pesa but run by the central bank. Socially, I'm all in favor of inclusion, but it's got nothing to do with digital currency. That's to do with other KYC, AML, CTF, issues. Economic, I think we should be designing digital currencies for economic growth, not for cost reduction. And at the political level, I have no idea what any of the answers are, but I at least know what a few of the questions are. So I hope that's a good summary, Michael.
That's a perfect one, Dave. And I've always liked the fact that as a journalist, we're always keen to see that there are no answers, just questions, because that just keeps us occupied and gainfully employed. So I'm looking forward to digging into some of those questions. I'm very glad that you did, in fact, mention the elephant in the room, because it's not always the easiest thing to talk about, because behind that elephant, I think, some sort of sometimes scary images. Let's wind up here with Pindar. Wong, who is the chairman of VeriFi and sort of somebody who's been involved in internet governance for a very long time, an early pioneer in Bitcoin, and I have to, for disclosure purposes, remind everybody also the chairman, I'm keep on slipping up here today, a member of the advisory board for Coindesk. Pindar, you've been looking at this stuff for some time, and I'm particularly interested to hear about your take on how CBDCs and digital currencies generally feed into this idea of a machine-to-machine economy. This industry 4.0, fourth industrial revolution world that is developing in parallel, and I think has to be understood as a context for all of this. So over to you. I think we're Peter. I think we're having some audio problems. So that's my experience. I think the others. Let's just see. Yeah, let's yeah, let's see if we can just give that a bit of a tweak.
Is that better?
That sounds like you might be better.
Does that help?
I think you might be better. Let's give it a shot. Off you go. In the meantime, Pindar, if you, I'm just going to have a bit of a reflection, if we don't, for the conversation we're having in a moment. You know, I think we've just heard so many different perspectives on this, you know, I think it's just really important to step back and see this from an international perspective, and sort of a broad, you know, zeitgeist and paradigm shifting perspective, because it's very easy to get, I think, caught up in the nitty gritty of what it means for this or that particular country or this or that particular business and company. But the way that Dave talked about, you know, at the end of the day, these are still political questions. Money is a project 7,000 years old that has always had political implications. Who controls money controls essentially power. So, you know, inevitably, as we go through this discussion and we talk about, you know, what it means for industry, what it means for financial inclusion, remembering that at the end of the day, this is a political question, I think is critical. And I know that those are difficult questions, and it's hard for us from all of our positions to be able to necessarily explore those. But you know, it is a vital element of this, and this is why I framed this at the beginning in terms of these broader questions. So Tanvi, while we're waiting for Pindar to hopefully we can get him back so we get some audio, I don't know if you have any reflections on that. I mean, you know, the geopolitical implications are, you know, as Dave suggests, elephant in the room here. Do they have to be? Does it have to be something that breeds tension, or is it something that can be resolved by the international community in a way where this technology is ultimately just for the betterment of everybody?
Yeah, that's a great question, Michael. And I think, you know, if you allow me, I would actually like to respond to a point you made that money is, you know, money has been an instrument, you know, and that's what it is at the end of the day. And I think the whole CBDC revolution sort of brings it back to those fundamentals. And I think the way crypto has also done that in many ways, you know, it helps you understand that money is just a tool to attain certain aims. And now we see sovereigns, you know, countries are going to be running these experiments with money, you know, where they're going to direct it either for economic growth or innovation or, you know, compliance or, you know, whatever aims they have. And that's, at the end of the day, that is what money is. It's a technology.
Okay. On that note, it's actually a good segue, because I think Pindar is now back. Hopefully we've got his audio up and running. And that question of its role intersecting with a whole host of other technologies, I think, is one of the most interesting aspects of this. Pindar, let's see if you can we can hear you now.
Thank you. And I'm sorry for the technical difficulty.
Just to loud and clear now. Great.
Thank you. Well, actually, I slightly disagree with the earlier statement. I think money is not just a technology; it's a social contract or social phenomenon. What's interesting, though, is as you look for example, the wonderful report you put out with respect to China's DCEP, there is an architecture, but there's also an economy and around it. So if you look into the future at the pace of government and decision making, whatever currency, CBDC or cryptocurrency, it has to be future-proof. And so in this future economy, it helps to look at who are going to be the participants in that economy. And I think what's interesting here when you have an aging population like China is where are the new efficiencies going to come from? Either efficiencies in terms of physical labor, and that'll be robots, the so-called Industry 4.0 machines, and or efficiencies in mental processing, i.e. AI, in other words, algorithms. And so when you have algorithms and robots as part of your economy, then it's no longer good enough to have KYC, which is know your customer. You will need to also have KYM, know your machine. Why? Because when machines are part of the economy, and my vision here is a wallet in every device, then some of the points that were raised earlier are going to be very, very touchy. Why? Because we no longer have one coin of the realm, right? As David mentioned, we may have many coins of the realm, not just substitution effects with other CBDCs, but now, in spite of where you are physically, you actually have a choice of which economy you participate in, irrespective of your geography. So it is actually no surprise to me that the Bahamas has taken the lead. Why? Because that whole area, the Caribbean, from a political perspective, has been the leader in financial cryptography for the last 23 years. I once found myself in 1997 in the island of Anguilla talking about financial crypto. And that was because of a policy issue, which was it was not tenable to have the discussion in the United States at that time. And it's ironic now that we're talking about a world where we have, I think the United Nations has 180 recognized currencies, and Tommaso might correct me on that. Right now, though, in sort of the crypto land, we have over 7,000. So right now, when making money is in fact a command line, then the velocities of money, when you have machines to machines communicating, machines to machines ordering, invest in those networks that are in fact the most efficient from that perspective. It also means that runs on the bank, so to speak, might actually occur at the speed of light. So when we have new endogenous effects and God knows what exogenous effects, how does one actually reason about this? Well, I think you can reason about it through an architectural approach. So I would also first say that any comments or observations with respect to DCEP's architecture, as you claim to make, are in some sense at this point pure speculation. There's very little information out there. Now, this is in spite of Zhao Qichang's earlier statement. He's been the central bank governor for the People's Bank of China for 16 years. Only recently, on the 23rd of October, has DCEP been made a draft law. It's actually far too early because these are basically designed, as I understand it to be, for the domestic economy, not necessarily for international use. Maybe later as part of this dual currency strategy or dual circulation strategy, it's called. But the point here, though, is when you start already imagining that you have algorithms who do need to be identified and machines to be identified that are communicating over, for example, a 5G network with low latencies, then the whole notion of what is the firm and what are the algorithms that define it are important. So the key word here, and I think there's a global word here, is not looking at the sort of the level of a nation state, but looking at it in the terms of a city, be it a chartered city or a smart city, as it's called. These smart cities, in some sense, are going to be driven by data. So I agree with you in your point with respect to, in fact, the new currency, right, is no longer oil, right? It's actually data. And as we know right now, China is going through a silicon shock comparable to the oil shock of the 1970s. When you have $300 billion that China invests every year in semiconductors and only $240 billion in oil, China is already a data economy. The question is, what are the privacy concerns? Can they be layered? Private to whom? These are, in fact, very important discussions to have. It was a question I raised today at the Greater Bay Area meeting, which I mentioned earlier. But the point here is that if we have an overall architecture, not just technical, but policy, then like the internet architecture of before, as the pieces change, we can still have a coherent discussion. One point that I think most people have actually missed. In 2019, many of China's largest tech firms have banks in Hong Kong. So let me give you an example. Ant Financial, you heard about the IPO that was canceled, has the Ant SME virtual bank. Xiaomi, which makes the mobile phone, has Insight Fintech as a virtual bank in Hong Kong. Tencent, who does WeChat Pay, has partnered with ICBC for Infinium, another virtual bank. We have 8 of these. JD Finance had partnered with the Bank of China to have Livy, VB. And even our largest sort of travel firm, because people are imagining Chinese tourists going to Europe, for example, and using DCEP for payment, they have partnered with Standard Chartered and our local phone company for SC Digital. So the point here is, if you have a whole architecture which has humans, right, yanmanbai, the people's money, and the machine's money, and the algorithm's money, then I think you may be slightly closer to the mark, because that's the whole architecture, because it takes so many years to deploy. The difference here, though, is that this is engineered, I guess, from people who have come up from an engineering background, and they think in terms of measurement. That's interesting, but it's also very, very scary at the same time. Thank you.
Thank you, Pindar. I think it's actually the perfect place for us to now move into a broader discussion, because at the heart of it, these are core issues. It speaks to the idea of the power of technology, in this case, not just this digital currencies, but robots, essentially, the emergence of AI and a machine-led economy, and the place that human beings occupy in all of that. I'd actually like to go to you, Governor Rolle, if you don't mind, because you talked a little bit about one of the core points that Pindar was getting at there, and this notion of privacy, this notion of almost human agency being critical to how we're going to live in this new world. And you've posited that, this is where the strength of regulation and education is going to matter, almost as if to say, we can't do anything about it, technology, and that may well be the case, that there's just no way of dealing with the challenge to our privacy from a technical point of view. It comes down to what we do as a society to protect and maintain that. How viable is that? How quickly can we educate people to be able to look after this, and how responsible can governments actually be to protect them?
Well, I think we need to realize that, first of all, it is not a CBDC issue, and it is more about the digital footprints that we are creating, and recognizing that in some cases there is more exploitation and abuse because of the unregulated aspect of data use. And so focusing on a CBDC and concerns about the electronic transactions trail that individuals are generating, I think has accelerated the attention, in my view, on putting the right safeguards around data privacy issues. And for us, one of the areas that we know that we have to pin down and protect is how the data that is generated by people under the age of majority, the minors, how their data is used and handled. What sort of limitations we should put on minors' ability to give consent, or even parents and guardians' ability to give consent for minors, recognizing that minors do become adults later in life and might look back, with less approving set of eyes than we might assume. But I do believe that it has to be tackled no matter what. We can't ignore it. And the best way to deal with it is to make certain that you draw the line as much as possible between privacy when it matters and rules around, individuals knowing when their data is being used. Technology has advantages as well to notify us when we are being spied upon, if you want to use the term spy. So I think let's also use the technology to enable people to monitor the use of their data much more. And I think we'd be beginning to address, some of the concerns that individuals would have. But please let us not assume that privacy is suddenly on the attack. It is probably being attacked in ways that need to be regulated irrespective.
And yet, there's this sort of unstoppable, acceleration of this new technology. We're going to 5G to 6G. We are putting sensors everywhere. We're building a world of the Internet of Things. It is just this entire convergence, if you like, of a host of different technologies at this moment. Dave, what is to Governor Rolle's point, what are the actual some of the benefits that we can get from this? How does this emergence of money with tech bring us into some positive advances in terms of managing resources, for example, and essentially building an economy toward prosperity?
Well, I think there's two parts to that, I think, because the first is the ability of digital currency platforms to allow us to do some of the interesting things that Pindar and Tommaso were talking about. So the idea of I'll use the canonical example that everybody uses, which is having your car negotiate for its own parking space and compete in auctions for parking spaces and so on. Those kind of things are enabled by this, and I think they're really important, especially because Pindar is pandering to one of my crackpot theories there about how cities will be the sort of central organizing principle of this economy. So there's that part to it, obviously. But the other part depends on a much more informed discussion, I think, in society. I mean, what I would say to people like John, well, I'm sure he knows this already, is that it's up for you guys to set the dials. Like, as technologists, all of these things right now are doable. If you want an anonymous digital currency, I can make an anonymous digital currency. None of you want that, by the way. However much you think you do, you don't. But I can make it. If you want one that's completely monitored in every respect, I can make that too. In reality, the dial's going to be somewhere in the middle, but I'm uncomfortable with technologists setting that dial and making those choices for us. I think but we can't ask legislators and regulators to set those dials without a much more informed context. And to be honest, I think we have to put our hands up and accept some of the responsibility for that over the last few years. I think despite Michael's excellent books in this respect, I'm not sure we've communicated. I mean, you just look at the House hearings going on at the moment with Zuckerberg or whatever, and the regulators are asking such ridiculous questions that. So, what I would say to people like John is that I think the spectrum of possibilities that we can deliver, if you like, what I tend to refer to as some of the counterintuitive properties of modern cryptography, open book accounting and cryptographic blinding and zero knowledge proofs and all this sort of thing. I think we can deliver a much wider range of possibilities than possibly you might imagine at first. And if we can facilitate, an informed discussion, I think you can demand more from the digital currency infrastructure than you might think at first. I guess that's how I would say it. Yeah.
Yeah. I would like to come in there. Yeah, Michael. I mean, this is perfect. It's actually a great place to plug Policy 4.0 as well, if you allow me. But this is exactly the mission with which we started, because as Dave said, these questions they're not just questions of money, and they're not just questions of technology, they're questions of ethics and law, and there has to be a social discourse around this. And there's very few platforms to do this, and I think coming from the policy world and coming from that space of, seeing how the policy gets made at the end of the day. I mean, there is this gap, and I think that's a very tough one to bridge in the context of CBDCs, especially.
Yeah, let me jump in there. I think Tanvi is absolutely correct. And let me sort of retract. I think I made a mistake earlier I think I want to applaud your report insofar as starting a conversation. I think it again demonstrates that it's good engineering. However, it's a conversation, many stakeholders, policymakers, policy people like yourself, that makes things richer. At the same time, it's very timely because, if one notes this RCEP was mentioned, which was, again, this world largest trade area that was signed on Sunday. India was originally part of that, and then it sort of decided to withdraw. India has been, had blown hot and cold with respect to cryptocurrencies, for example. It cannot be ignored. As the world's largest democracy, as with over 1 billion people, with Aadhaar and some great technology already deployed, I think the balance of the discussion is going to be how India decides to engage both with CBDCs and also cryptocurrencies. So I hope you can start a conversation in your community, because I think it would add to the global discussion.
Yeah, and that is what we're doing next. So we're happy to keep people updated on that journey.
I'd like to go to Tommaso actually on this. We're going to keep going for a little bit over time. We're going to run for maybe 6 minutes here, a little longer. Tommaso, I mean, what Dave was setting up there, and I think Governor Rolle's comments as well helped us understand, is the critical role of government essentially in establishing the boundaries around which these infinite possibilities, as Dave was suggesting, can be built. And ultimately the guardrails are what do governments as representatives of society. But I mean, there really is an education problem, not just at the citizenship level, but at a leadership level as to what is going on. From your perspective, dealing with governments everywhere on these issues, how ready are we, and what can we do to ensure that regulators, policymakers really actually grasp the significance of what they're dealing with here and build those guardrails and enable technology for good rather than for bad?
Thank you. I think we're seeing a pretty unique and phenomenal collaboration, actually, around the world and among policymakers on these issues. And I think that one of the reasons we're seeing, or there's several reasons. One of the reasons is, of course, the realization of an opportunity to really make a difference and implement change thanks to new technologies. But I think there's also a competitive threat of very large private companies offering means of payment that are not necessarily secure for users and may have spillover effects on policy making, such as the control of monetary policy transmission, and financial stability. And I think the confluence of these factors has really motivated policymakers to come together, especially around the issue of cross-border payments. That it's an old problem, but we're starting to have new solutions. So the FSB report that was put out in October, to which the funds contributed significantly, as well as other international organizations, is actually pretty exceptional. It's a report that is not just high-level considerations. It's actually a report comprising very detailed and ambitious targets. It's a report that makes institutions accountable to deliver. And it's a report that is most likely going to lead to significant improvements in cross-border payments. But of course, one important thing that you brought up is not just collaboration between countries, but it's also collaboration between all the different entities that are relevant. So it's central banks, it's ministries of finance because of the spillovers on capital flows, but it's also private agencies that are responsible for privacy, for data privacy. It's also antitrust agencies. It's all these different groups that are not necessarily used to collaborating even within a country. And now we're making it all the more difficult because we're talking about collaboration across countries. But I really think that collaboration, cooperation is really the key word in order to make improvements, in order to set certain regulatory standards, certain technological and legal standards, as I was saying before, making sure that we don't have loopholes, making sure that there's not a race to the bottom in terms of regulatory structures. But I do see a lot of that going on, and I'm quite reassured to that extent.
Well, that's good to hear. Glad to know. We're running pretty tight on time. Let's just sort of wind this up. Pindar, I mean,
well,
it's a moment where we really do need international coordination. We have a climate crisis, for goodness sake.
Absolutely.
How does all this feed into that?
We need a race to the top. I mean, let's be clear. Like whatever new cryptocurrency or CBDC is deployed and drives that whatever economy, those economies need to be, compatible with life on this planet, right? And therefore, if, going back to, let's take China's contribution in terms of what was recently announced, which is it's going to be peak carbon output by 2030 and carbon neutral by 2060. And so I would love to see in these reports that, the naturally determined contributions of each country in terms of carbon, which is, again, Mother Nature doesn't take US dollars or RMB, right? Its currencies are nutrients and energy. So as long as we keep that in our mind, the clock is ticking. And so I think what we really need to do is policy forums like 4.0, leading the way, starting conversations, and let's all join in.
All righty. So on that note, let's hand back to Tanvi. Thank you very much, all of you. It's been a great pleasure. Tanvi, if you could just to wind us up here, it would be great.
Yeah, thank you, everybody. Thanks to the wonderful speakers. Thanks, Michael, for this amazing moderation. And thank you, everybody in the audience for joining us from so many time zones. And just for those of you who are interested in the reports, this is how you can get them. There is a form on our website on our publications page, and that's www.policyfourpointo.com. And this is a licensed access report. So just write to us there. Feel free to email us with any questions, and have a great day. Thank you, everyone.
Thank you, everybody. Thanks, panelists. Pleasure.
Thank you so much, Michael. Thank you, Coindesk. Thank you, Policy4Pointo.
Thank you very much.
Yeah.
Bye-bye.
Thank you, everyone.
Bye-bye.